Well, US markets on Friday saw a dramatic recovery. In fact, the selling of late has been relentless, and that's largely on rising fears of both a recession as well as a possible stagflation. So let's talk about this a little bit as to where US markets stand in the overall context. The Dow closed around 3 basis points higher. Sorry. So Well, US markets were mixed in trade on Friday, largely on the back of recession fears as well as, of course, stagflation fears, which have marred US indices. There was a sharp fall before a good steep recovery late in trade for US indices. The Dow was up around 3 basis points in trade on Friday and was down 2% on Friday before staging that late recovery. Mind you, eighth consecutive week lower for the Dow, not happened since 2001. So definitely very important in the overall context of things that the Dow is down over 15% from its all-time high. When we're looking at the S&P 500, closed largely flat with a positive bias, up just about 1 basis point in trade. It was down 2.3% at its lowest before, of course, the dramatic recovery that happened on Friday, and it was down 3% for the week. In fact, 8 out of 11 sectors for the week were in the red, and it's down for the 7th consecutive week in a row. Mind you, the S&P 500 down that much. It's the in fact the largest losing streak for the S&P 500 since 2001 again. So clearly, in fact, it slipped into bear market territory for a bit on Friday, and it's down 19% from its all-time high. When we're looking at the Nasdaq, it was down around 0.3% on Friday. It was again down 3% for the week. So clearly again lower, and it's down 30% from its all-time high. Well into that bear market territory is where the Nasdaq currently stands. So clearly negative cues when we're looking at the overall context of things, including the recession fears. Where are the US futures currently? Well, the US futures were largely 1% higher, both the S&P as well as the Nasdaq futures. Now, currently, they are more tempered, 2/3 of a percent higher for the S&P futures and around 4/5 of a percent higher for the Nasdaq futures. When we're looking at the Dow futures, around 0.5% higher in early trade today. So they were far better off in a couple of hours back, but that has kind of been more tempered since the last couple of hours or so. When we're looking at how Europe did in trade on Friday, largely in the green. When we're looking at the stock 600, up around 3/4 of a percent in trade on Friday. The FTSE was up around 1.2%, so definitely positive cues there. Moving quickly on to how Asia has opened today. Asia had opened largely positive with the Nikkei up over 1% in early trade. Now, currently, it's standing around 0.5% higher. The Chinese indices, the Shanghai and the Hang Seng, are both lower in early trade today. The Shanghai down around 0.5%, the Hang Seng down around 1.5%. The Kospi, which was in the green, has now turned a slight negative bias, down around 5 basis points, and the ASX 200, which is well in the green, is now up just 3 basis points. So clinging on to that positive gain at the moment. So largely, it's a receding positive trend as we see it in early trade today. Even the SGX Nifty around that same region. It was up around 0.5% in early trade. It's now slightly in the red, down around 10 basis points, slight negative bias coming in. Moving quickly on to oil. Oil, in fact, Brent has now breached $113 a barrel, and that's where it's kind of stabilizing. So that's definitely a concern for emerging markets. When we're looking at gold, it ended last week a really good gain after very long. Gold has been on the wane of late, and gold is now at around $1,850 an ounce. Bond yields, which had receded to 2.78% on Friday at close, are now at 2.81%. That's where the US 10-year bond yield currently is at. And cryptos, which were completely beaten below the $30,000 mark, was where the Bitcoin was, is now at the $30,000 mark. So that is an important metric to look out for as well. But it's receding fast. So largely, it seems to be a receding kind of a positive sentiment currently in markets. That's how it's framing up for Indian indices at the start of this new week.